I actually on a Sunday morning, I was talking to AFM team and I said, Sunday ko kaun aayega yaar to come and listen. Sunday is normally a day of rest and relaxation, but I'm very, very surprised with the turnout. I'm positively surprised. It's like a super turnout. So if I had something in the evening, I would have said cheers, but I'll make do with this bottle of water. Here's to all of you. I think you guys have cracked one very big uh, thing in your life that you have come here to learn and listen. So let me try and make this fast. I know I am standing between you and a cup of tea, and there has already been some conversation around this, like see how this works. So these are the five. I have got a very big presentation, but I'm going to keep it as short and quick as possible for you. I think if I can, I'll spend 20 minutes on this slide only because this slide is actually taken from BCG, and you see what's happened to asset management totally. एक आपको सुनना पड़ेगा. Just think of these numbers. These are all like global AUM this is in $1 trillion. Okay, this is $167 trillion. You're nowhere next to it. But just see how the entire alternates business has gone. It's gone from 14, 20, expected to go to 23. Why has that happened? Very simple. Because of this line. This is the passives business. This has gone from 15 to 20, going up to 22. Passives में क्या होता है? Normally AMC को. Obviously margins go down. The other thing is, so obviously one thing AMCs are already doing globally is that they are already moving here. Now what's the story in India? Very clearly, I think this is what has happened. I mean, I would have normally spent some time on this, but percentage wise, if you see, this is up to 23. Obviously mutual fund AUM is much more now. It's close to 68 lakh crores. But the growth rate is about 17, 18%. Now look at alternates. Alternate is roughly about 52%. So obviously very small base, chota base hai. Started in 2014 with less than 0.06 lakh crores and now it's about 3.89. But growing, expected growth is much, much more, right? Now, kahan se aa raha hai paisa? Interestingly, both internally and externally. These are some of the biggest domestic capital private equity guys in the country. Chris Capital, Kedara, multiples, आपने इन लोगों का नाम सुना होगा. They are all looking at, they are all raising 30-40% more money than their previous fund. Now, interestingly, most of the private equity money does not come from Indian capital, it comes from offshore capital. Offshore capital, most of the larger ones, Temasek, for example, Bain Capital, KKR, all are launching funds where India allocation is much, much more. So, मैं क्या बोलने जा रहा हूँ by these last 3 slides is that there is a huge surge of money coming into private equity. Why is that happening? It's coming both domestically from local investors. It is also coming from offshore investors over here. Now, why is that happening? I think obviously this is the share of India. I think obviously 2 things. I think you will hear a lot about this in the next 2 days. So I won't spend time on this, but everyone heard of the China Plus One story. And of course, PLI has made a very big impact. So in the share of Asia Pacific, Indian share has gone from 15 to 20. Don't look at Japan. Japan is basically one thoda blip hua tha thanks to SoftBank. China has obviously come down a bit thanks to COVID, right? What has happened in the investment space? I think very importantly, we are yet very, very less. So please think of alternates or private equity, private credit as something which we were maybe in mutual funds in about 20 years back. Penetration of Indian in terms of total is yet very, very, very less. Remember, these are to their GDP. So if I were to look at it in rupees, $1 trillion, it will be much, much lower. But again, huge potential. Now, this is the most important slide for you because many people come and tell me this is all very sexy. Private equity looks fantastic. But is pe paise bante hai kya? Because ultimately, all of us are wealth managers. We are trying to make some money for our investors, for our partners, right? Now, this is the interesting slide because across, and India has this very, very beautiful advantage. See, most economies are tilted towards 1 or 2 things. When you think of China, aap kya sochte ho? Manufacturing, correct? When you think of India, you can do all these things. Consumer, IT, BFSI, healthcare, shipping, manufacturing, consumer. Now, this is an interesting thing because this is the value of your capital invested over the last 8 years. So, had you put money, but your average holding period is only 4 years. What does that mean? Unlike a mutual fund, alternates don't take the money, everything in advance. We take it over phases. The same thing happens on the return. We don't give you money back instantly. The portfolio matures. Say there is an IPO exit, it happens, we start returning money. So your average holding period is between 4 and 5 years. Now, if you look at that and compare that your average portfolio has grown 3 times in 5 years, That translates to a CAGR of roughly about 24%. Now, this is the big return opportunity. When this slide, please keep it in your mind because the rest of it is English, this is maths. This is what your customer can hope to make across a variety of industries. It's not tech focused, it's not BFSI focused, it's not pharma focused. All these industries are available here, right? Now, I think importantly, this is, people have diversified across, right? You have global, you have government, you have domestic, and now just look at the kind of places they have gone and put money into, right? What these bars means is that these people, Adia for example, has given money in ITS, has given money in advanced manufacturing. So the opportunity to diversify in Indian private equity is also extremely high. Again, unlike some markets, like when you think of China, it's manufacturing. Aap Taiwan mein jaoge, you'll think of more semiconductors. If you think of, for example, compared to the US, which is possibly the world's most dynamic private equity market, India is possibly number 2 in terms of opportunities available, right? Sorry, this is not moving. Lastly, of course, I think this is where they are growing beyond P. I think you can see many, it's not only P. I think you heard Manish before us talking about private credit. There is private equity, there's private credit, there's private real assets. And now all these people, these are all large players, KKR, Blackstone, Brookfield, General Atlantic, Risk Capital, they all have put money into various things. So they put money into private credit here. For example, here, Mudabla is an extremely large investment fund based out of the Middle East. उन्होंने $1 billion का they have tied up with Goldman Sachs to put money in private credit. So this is all external money. This is external money getting raised in very local strategies here, right? Now this is interesting because these are your types of AIFs, right? Because the AIF I told you is about 4 lakh crore market. It's split between Cat 1, Cat 2, Cat 3. Cat 3 is obviously listed in hedge funds. Now just see if lots of people are there. Now interestingly, 361 is there in all these key categories. We are in private equity, we are in real estate, we are in debt, and of course we are in listed also. So ye char cheez hai. I'll talk about that in the end of the presentation, but this is the kind of AUM share that's happened. Obviously, private equity has a large share. 46% of the total money raised has gone to private equity, largely gone into all these players. And they are big, they are local as well as domestic, right? What's the current industry size? Now I'm going to go into one more interesting area, which Manish talked about, which is private credit. Private credit today is about $80 billion. मतलब roughly 3.5 lakh crore के आसपास है. Most of it is going here. It's only 2%. This is the total pie. Private credit was 2% earlier. It has come to about 17%. Why did this happen? क्यों हुआ? If you remember, it can. Our view is that this will go from this to about 96% because of this basic slide, right? Where was money coming? Agar if you are a mid-sized company, आप किधर से borrow करोगे? You would either borrow from NBFCs or you would borrow from mutual funds. If you remember credit funds, sorry, I'll just go back. So NBFC share has come down from 39% to 4% because RBI has tightened a lot of their credit standards, right? Number 2, you know what has happened to credit funds in the recent past. It used to be a 1 lakh crore industry. It is down now to hardly 30,000 crore industry. So the share has fallen to see. So what is the advantage of this? That there is a huge pool of borrowers wanting to borrow in private credit. So private credit ranges from 14-15% all the way to 17-18%, right? And this is another brilliant big opportunity that you have over here, right? So I tried to cover 2 things. I know I'm a little fast, forgive me. I'm a little conscious of time. I know that you guys have been sitting in this cold room for the last, I think, 2.5 hours. We have a nice stall outside, and I thought I'd just give you a view about what is happening on private equity. It's an extremely large opportunity. India is a fantastic growth market. We have availability of investment across different industries. So it's very good for your investors because you are not getting into a sector focused sort of an investment. You are able to get into a private equity, you are able to buy into a whole diversified asset pool. Same thing is in private credit. I think this is a great opportunity. Mera sabse bada concern hai when I sit standing on the stage today. I've been a seller of mutual funds for more than 20 years. And I've always told all of you to please buy debt and equity proportionately. Because in times of distress, like if you remember 2010 to 2020, I don't know how many of you will believe me, but the fact is that government security funds actually outperformed equity. The 10-year GSEC did better than the Nifty, right? Of course, aaj ke Denmark mein people don't remember it because of the last 4 or 5 years, but y'all are all wealth managers. Y'all know that it requires different asset classes to give the investment, to give the right flavor of investment to your customer. And that's your difficult job today, because if all your customers will tell you to put money into some small cap, mid cap fund, I think what you'll have to do is try and give some better things. So private credit, private equity is a great opportunity. This is what's going to happen in the world, our view. This is not our view, this is a large consultant view, that this is like a $24 trillion industry which is growing at about 10% CAGR, right? India is just very, very small. We are just 46 billion, right? So if you remember my first slide, that is the kind of mega money this is there. This is growing at 30-35%, right? Now you will tell me who's putting this money, kahan se aa raha hai paisa? Just a quick one I'll show you. I think our business, I'm going to take 5 minutes on this, because we've had a bit of an ownership change. We used to be IFL Asset Management about 2-3 years back. We are now rebranded called 361. We are now owned by institutions. In fact, the largest private equity fund, one of the top 5, is our dominant shareholder, 24% Bain Capital. And we have another set of institutions, both domestic and foreign, which are about 47%. So we are 70% institutional owned, 15% is with promoters and employees, and 15% is with public. And we are 100% subsidiary of that. Now, this is what we all do, right? I think the advantage of working with 361 is that you will get access to everything that you want in one roof. For a wealth manager today, the biggest and most precious commodity is time. You cannot be dealing with 20 mutual funds, 10 PMS providers, 5 private credit providers, 5 private equity providers. We have got all this. Now, interestingly, they are all very, very large. We run roughly about $10 billion of assets. So a lot of things which people told you, we are already running. We have possibly the largest private equity franchise in the country today, with about 23,000 crores domestically across early growth and late stage. So whichever type of money your investor wants to put, it is available. We are possibly the largest private credit franchisee with about 9,000 crores of assets. Again, over 5 schemes. There is already IRR. So all the things that Mani spoke about, diversification, cost, return to investor, wo sig dikh raha hai. Portfolios are available. I think the advantage that I have in this room is that many of you have not partnered with us. I am not, and we have a nice stall outside. So if you want, please go there, and when you get time, please have a conversation. Please just give your name and number, and we'll get in touch with you and try and take it there. Now, interestingly, you will tell me, yeah, who is selling this? Now, this is 85,000 crores. Out of this 85,000 crores, about 23,000 crores is offshore money, and about 11-12,000 crores is MF. So there is 50,000 crores of alternate money which is sitting in my funds. Now, where does this money come from? It's come from family offices. I'm sure there are some family offices here. They have put direct money. It's come from bankers. All the bankers have sold. It's come from wealth managers, which are some of the names you know, Kotak, 361, Julius Baer. Those are their clients have given us money. And now in the last couple of years, I'm seeing a lot of advisor money also starting to come. I think that's thanks to people like AFM. I think this training is very, very important. And this business is now getting reasonably heavily regulated. So I think my belief is, jo regulate hota hai, uska actually expansion ho jata hai. In the last 20 years of my career, last 15 years, MFs have seen so much regulation, but the corpus has gone up almost 10 times, right? So contrary to what people think, where there is regulation, there is growth. Yes, thoda initially adjustment hota hai, but wherever right now there is the APME coming up next, I think Romit knows, there is a lot of things happening around AIFs. AIFs now, if you want to buy, automatically you get dematted. Taxation has become very, very clear. The whole process of onboarding, jahan pe 40 page banna tha, aajkal pura, everything is becoming digital. So the same features that you have in a mutual fund, which your customers are used to, can be done here very, very easily. So remember, there is 50,000 crores of assets. I can tell you the breakup because I know Anuna is here with me. He's our head of sales. He's coming in the next panel. So he can give you a little more information on how we raised that 50,000 crores. But it has come from Indian investors through Indian distributors. ये ऊपर से कोई चांद से तबका नहीं है. This is not offshore money which has come, right? So it's a big opportunity, and our view is that 50,000 in the next 5 years can easily scale up to 2 lakhs. That's our internal view. And if you take the industry as a total, I told you the private equity market, the whole alternates market is scaling up for 30-35% growth. So please add some level of alternates to your portfolio. It's a fantastic growth engine. It will take you some time to understand the product. It will take you some time to pitch the product. But thanks to all of you being part of AFM, you are anyway part of a very good group. You have all taken the time on a Sunday to come out and listen to people like me. So please take advantage of that and add that portfolio to add some part of private credit or private equity to your client portfolio. Right? Madam, thank you.